Good afternoon, ladies and gentlemen, and welcome to this week's trade review session. As you'll have noted from the Telegram service this week, I had a flu jab yesterday, and unfortunately, it's not been particularly kind. So I'm going to keep this afternoon session to about 15 minutes. So I would encourage you, if you can, is to get any questions in as quickly as you can, and I'll do my best to answer those within the 15-minute period. As always, I'll try and get back to you during the course of the remainder of the day if that's feasible. But I do want to try and get home reasonably early this evening and try and work off the effects of this flu jab. So markets have been quite volatile this week and since last Friday, when obviously Donald Trump was diagnosed with COVID-19. We've then gone through a period where it looked like a stimulus deal was unlikely. Then we're being told that there may be some form of stimulus deal, something in relation to the airlines, and everything really is back on the table. Being taken off the table and then being put back on the table. So it's a little bit confusing. Gold has rallied quite significantly today. I'm on the wrong side of it at the moment. Just sold into it just recently. One of the reasons for that is obviously the number of coronavirus cases is on the increase in Europe, and I think people were largely, or certainly the US markets were largely ignoring that. But now that we see that the number of cases in Florida has spiked again, we see possibly some form of flight to safety. But when I compare that with the reaction that we've seen in the Dow, it isn't a particularly strong reaction. So I remain unconvinced of that, and that's why I've been selling into gold. But as I've mentioned, I have been on the wrong side of it. Got one question in there where we're being asked about stops again. So I just wanted to, and we can show you some of the maths behind this if you like at some point, or you can email me individually and I'll do that. As you know, I don't keep rigid stops, and the reason for that is, or there are a number of reasons for that, but one of them is that I don't particularly like the way that the CFD and spread betting brokers trigger stops. So I like to be able to trigger them myself, and that comes from working on trading floors and on live markets where the price needs to trade before you trigger it. So the way that I suggest that everybody places their stops is that you have a nominal stop number through which you can then work out what the size of your trade should be, so that you are risking somewhere between 1 and a maximum of 4% of your account at any one time. And it's this type of discipline and getting this right from the beginning that is the format for becoming, or trying to become, successful in that retail trading environment. And if I'm asked what is the biggest problem or the biggest mistake that retail traders make over the history of their retail trading career, it is that they miss size and they don't instill that discipline very, very early. So if you have a small account, it means you're going to risk a very small amount of money to the market at any one time. And that can be unexciting, but it's important that you learn the discipline from the very beginning and make sure that you are only risking a certain amount of your account balance at any one time. So the answer to your question is I trade at, or my regular trade is at 3% of my account balance. Sometimes I take that up to as much as 5%, sometimes around the opening bell in New York. But I think for the majority of people, we recommend somewhere between 1 and 3% is an acceptable level of risk. And it just means that you've got a number of trades that you can carry at any one time. So if I'm carrying 3 or 4 positions, as I am at the moment, that enables me to do that. But at the same time, it allows you to suffer a loss from time to time, which unfortunately will happen. And nobody, unfortunately, is immune from a situation where they don't suffer losses. And I'll just bring up my trade sheets from this week to emphasize that fact, if you like. So there's a number of things that I want to talk about this week, but then we've got the trade results for this week. The one day obviously that stands out is Wednesday. Some significant losses or stops on Wednesday in an overall perspective. The number of reds on the screen is far too many for me, so there's 4, 7, 8, 9, 10, 11, 12 losses, 13 losses there on the screen at the moment. Particularly good days yesterday, apart from a trade late on, which I've still yet to close. So the 3 trades in yellow are still open. I've just added another Dow trade to that. So there are 4 trades left open at this time, signified by that yellow colour. But of note on Wednesday was that significant down day. Monday wasn't particularly good, but managed to turn it around on Tuesday, carried a couple of positions over. So in my head, when I look back at Monday and I'm trying to ascertain how successful or otherwise the day was for me, it wasn't a particularly successful day. Again, not a very good start to the week, and I seem to be taking a bit of time to come in tune with the market, which, as you can see, obviously happened on Tuesday, and then again yesterday. So those were the 2 significant days with the big returns. Wednesday started off quite well, but then obviously was stopped out on a couple of Dow trades as we rallied away. As you can see from all of the trades this week, I've preferred to enter the market pretty much 100% of the time from the short side. I think there's 2 buy trades during the course of the week. The DAX trade first thing on Monday morning, and then I think there's one other somewhere as well. So not buying into the rally, and the Dow has opened up and accelerated out of the blocks fairly quickly on a few occasions this week, and that obviously has caught me on the wrong side of things. So those 2 trades at 27,910, 27,970 on Wednesday. Opportunities on the trade at 9.10 to take a few pips profit, maybe 10 to 15 pips profit. Didn't take it, and ultimately on the rally away after the opening bell, that caught me out. The trade at 27,970, after the markets opened, we did fall back. As you can see, there's a trade there that I closed at 28,003 for 57 pips of a profit. Should really have cut the other trade at that point, and I did speak last week about opportunities that you get when a trade is against you and you're holding it for a significant period of time. Sometimes when you get close to it, you should take the loss and look to recover from that particular point. That was one of those occasions. I didn't take that opportunity on Wednesday, and as you can see, that cost those 2 trades, totaling about 470 pips, and the return on the week, whilst it's 480 points at the moment, or pips with the 4 trades that I still have open. It could have been significantly better, but there were some big P&L swings, especially on Wednesday, in that or on that particular day. So losing trades 13, winning trades 63. Yes, the winning trades are all going to be a bit smaller than the losing trades, and possibly we can look into bringing those stops a little bit tighter on some of those losing trades. It will mean that you might get stopped out a little bit more frequently on some of the other trades, but that is one way to try and increase your profit potential in those particular numbers. In terms of the trades, gold again not faring particularly well. I don't know why I continue to trade it sometimes, but sometimes it's useful as a part of a hedging tool from a dollar perspective. In some of the other markets that we're looking at, one trade in the euro dollar, which is on today, which is losing money, but the Dow and the DAX, although varying or fluctuating quite significantly during the week, have returned quite nicely for me as well. So. So it stops and around technical levels, Obviously, I do always have an eye on where the support and resistance levels are. Ideally, I want to get them above the next level of support, below the next level of support where possible. Ideally, between or below 2 levels of support, or above 2 levels of resistance if it's a stop to the upside. So hopefully that's enough for you about stops. We'll just have a quick look back at the market before we finish off today, and hopefully I can run off and recover over the course of the weekend. So gold still fairly well inflated at 1926.5. The Dow hovering between 330 and 370, but not moving aggressively in either direction. The euro, in line with gold, is moving a little bit higher, as is sterling. Sterling pushing on that 129 or 130 mark again this afternoon. So look, I'll keep an eye on gold. I don't want to carry any trades over the weekend, so I'll be looking to close everything down over the course of the remainder of today. Won't be adding any new trades at this time. Just be looking to de-risk or unwind what I currently have at this time, so that there is no unexpected events that happen over the weekend. Donald Trump, his health, coronavirus would remain concerns for me, although they appear to be less of a concern to the market at this particular point. Thank you very much for joining me. We will be back to a full schedule or a full amount of time next week. Just unfortunately, the jab that I got yesterday has defeated me somewhat. Thank you very much for joining us, and I'll see you next week.